Automate a small monthly contribution into it, just like any other investment, and let those dividends compound over the years. As you learn and your money grows, you can explore crowdfunding or a rental property down the road. A smart move for taxes. REIT dividends are often taxed as ordinary income, so many investors hold their REITs inside a retirement account like a Roth IRA, where that income can grow and compound completely tax-free. Let me steer you clear of traps. Mistake 1. Thinking real estate only means buying a whole house. As you now know, a single share of a REIT makes you a real estate investor for the price of a pizza. Mistake 2. Chasing flashy crowdfunding deals promising huge returns without understanding the lockups and risks. High promised returns always come with high risk. If it sounds too good to be true in real estate, it usually is. Mistake 3. Buying a rental property before you are financially ready, with no cash cushion for repairs and vacancies. That is how a wealth-building asset turns into a stressful money pit. Build your foundation first, always. Let us lock it in. Real estate builds wealth 4 ways: appreciation, cash flow, loan paydown, and tax benefits. And you no longer need a fortune to get in. The barrier to entry has basically disappeared. The easiest start is a low-cost REIT index fund. Own a slice of many properties, collect dividends, and skip the tenants and toilets. Then, automate it. Hold it in a Roth IRA if you can, and think in years, not days. You do not need to be rich to own real estate anymore. You can start this week, from your couch, with the money in your pocket right now. The door to becoming a property investor is finally open to everyone. If this opened your eyes to real estate, smash that like button, subscribe for more simple money lessons, and share it with a friend who thinks they could never afford to invest in property. What is next? Comment below.
You have heard that real estate makes people rich, but you do not have $100,000 or any desire to fix toilets at midnight. Good news! Today you will learn how to invest in real estate with as little as $50. Real estate has built more everyday millionaires than almost any other asset. But the old way, buying a rental property, takes huge cash, loans, and constant work. We are going to focus on the modern, beginner-friendly ways instead. First, why does real estate work so well? It makes you money in not 1 but 4 different ways at the same time, quietly stacking wealth while you sleep. Let us walk through all 4, because most people only know 1. Way 1. Appreciation. Over the long run, property values have generally risen. The house or building you own tends to be worth more years later. Your asset grows in value while you simply hold on to it. Way 2. Cash flow. If you rent the property out, tenants pay you every month. After covering the costs, the leftover money flows straight into your pocket as income, month after month, whether you worked that day or not. Way 3. Loan paydown. When you use a mortgage, your tenant's rent slowly pays off that loan for you. Every month, you owe a little less and own a little more of the property, using someone else's money. And way 4. Tax benefits. Real estate comes with powerful, perfectly legal tax advantages, like deductions that can shelter a chunk of your income. Combine all 4 forces, and you see why real estate creates so much wealth. Now the part you came for. The easiest way to invest in real estate, with no money down, no tenants, and no repairs, is something called a REIT. Say it like REIT. It might be the best kept secret in investing. A REIT, a real estate investment trust, is a company that owns big income-producing properties, like apartments, malls, warehouses, and hospitals. When you buy a share of the REIT, you own a tiny slice of all that real estate. Here is the magic. REITs trade on the stock market just like any stock. You can buy a share through your normal brokerage app in seconds, often for the price of a nice dinner. No agent, no mortgage, no closing costs. And REITs are legally required to pay out most of their profits to shareholders as dividends. That means owning them often sends regular cash payments straight to you, your share of all that rent, with 0 landlord headaches. So how do you actually start? Step 1. Open a brokerage account, the same kind used for stocks. It is free and takes about 10 minutes on your phone.
If you already invest in stocks, you are ready right now. Step 2. Instead of buying one single REIT, consider a REIT index fund, or ETF. With one purchase, you own a basket of many different REITs across all kinds of property types, spreading your risk instantly and safely. This way, you are not betting on one company or one mall. You own a slice of apartments, warehouses, data centers, and more, all at once. One simple, diversified purchase makes you a tiny landlord across the whole country. REITs are the simplest path, but let us quickly cover the others so you know your full menu. The next step up is real estate crowdfunding platforms, where you pool money online with other investors to fund specific properties. These platforms let you invest in specific apartments or developments with a few $100 or $1,000. The potential returns can be higher, but your money is often locked up for years and the risk is greater. Read carefully. Then there is the classic path, buying an actual rental property. It offers the most control and the most powerful tax perks, but it needs real cash for a down payment, good credit, and genuine ongoing effort to manage. A popular beginner version is house hacking. You buy a small multi-unit property, live in one unit, and rent out the others. Your tenants help cover your mortgage, letting you live cheaply while building real estate wealth. Now, let me keep you honest, because real estate is not magic money. Property values can fall, not just rise. In a downturn, both prices and rents can drop, and your investment can lose value just like stocks can. REITs, because they trade like stocks, can be bumpy in the short term and swing with the market. And rising interest rates can put pressure on real estate values. This is a long-term game, not an overnight jackpot. And actual rental properties carry real risks: bad tenants, expensive repairs, and months with no rent at all. Never invest money you cannot afford to leave alone for years. Respect the risk, and real estate rewards you over time. So here is a simple plan to start today. If you are a beginner who wants real estate exposure without the hassle, begin with a low-cost REIT index fund inside your brokerage or Roth IRA. Small, simple, and diversified.